This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at BackupBradley above at the top of the screen and everything that we're talking about here today. Lots to go over, exciting news popping off. I tell you, this space is moving so quickly. JPM coin is live. We're going to get into that in a second, and I'm going to show you some implications that I think go along with that, and I'm going to show you some things happening around the world that's pretty incredible. Swift getting body slammed. You want to hear that too by the largest bank in Singapore, and you won't believe who they said's the better option. Let's get into this thing. Right now, we're going to look at some comments. This is Laura Shin, journalist from Unchained, her show and channel here. I highly recommend you subscribe to her. Her questions, her journalist work here. She's obviously, I believe, formerly in this financial space. She is absolutely brilliant, and she asked some great questions. This whole conversation with Brian Brooks today is wonderful. What I will say is I'm only going to grab a few excerpts out of this. The first thing we're going to hear right now is about public and private relationships, and let's hear what Brian Brooks gives as the analogy here of how to see how government doesn't build things, and listen to what he uses as these examples. You're really going to like this, and then a couple more spots we're going to hear, and we're going to move on to the rest of the news. Really great stuff going on today. Let's get started.
Exploring a central bank digital currency, and you said you believe one should be designed by the private sector. Can you flesh out what roles you think the public and private sector should have, and also what role you think commercial banks should play in the issuance of a CBDC?
Yeah, well, I mean, first of all, when people say CBDC, there are a lot of things they might mean, but I think what they really mean is a dollar that trades on a blockchain, right? A dollar that is instantly transmissible and programmable and all of those other things. If that's what we're talking about, we don't need to invent that. That already exists. What has been missing to date is some kind of regulatory framework around such tokens that would give people comfort that if they take this dollar from Gemini or Paxos or whoever, that it's going to be safe, that it really will be worth a dollar, and that when the dollar is redeemed, when the stablecoin is redeemed, there's a dollar somewhere to look to be made whole. But those projects already exist, and they're growing at an asymptotic rate. I mean, if you look at the growth rate of the major USD stable tokens, they have been basically doubling in market cap every 60 days for the last 4, 5, 6 months. It's kind of astounding. If you compare that to the idea of, well, what if we had the Federal Reserve or some other government entity build what amounts to a stable coin, their version of a digital dollar, you're told that the earliest date we can expect such a thing is 4 years from now. Now, I was just thinking, like, the entire Lewis and Clark expedition took only 2 years, but it's going to take us 4 years to build a government-built token. Laura, this isn't what government's good at. Government's terrible at building stuff. Like when we built the space shuttle, the government didn't build it. They hired Lockheed and Martin Marietta to build it. Raytheon, right? Same thing here. We've got tech companies that know how to build this stuff, and they've already built it. What government needs to do is what it is good at, which is put audit rules, put consumer disclosure rules, put sort of collateral standards around this so that markets can have confidence that the money's there. But don't build the tech. Why would you ever do that? That's not what governments do well. That's
really quickly, there's such an amazing point, and we've talked about it before, but the way he can articulate this is just so incredible to me because it is so valid. If the government intends to build the CBDC, it will take till 23-24. The tech is already here. We already have the USDC coin, right? We already have Paxos. We already have these private stable coins that you could actually work with. His point all along has been to put the regulations in place, let the private sector have the proper reserves backing these stable coins. That way we know that we're 1-to-1 or a surplus to that stable coin versus the dollar that's held, right, as a reserve. And we instantly, as a country, move to the front of the line of the fourth industrial revolution because we're not waiting for the government to figure out how to build the tech that's already available to us. Let's keep going.
what tech does well.
So, but just to make a distinction, so then who would be the issuer? Would it still be the central bank?
Great question.
Listen, I think most readers are familiar with the concept of the fiat-backed stablecoin. The binding constraint on the supply of fiat-backed stablecoin is the amount of dollars in circulation as determined by the central bank. But the stablecoins themselves are not issued by the central bank. I mean, like Circle and Coinbase issue a stablecoin, not the Federal Reserve. But that stablecoin is issued with the promise that it's redeemable for $1. Right? Same with all of these other fiat-backed tokens. So the Federal Reserve has the monetary policy role of determining how many dollars are out there. And by definition, you can't issue more stablecoin than there are dollars in circulation because you can't sell the stablecoin until somebody gives you the dollar. That's what I'm talking about regulators putting in place parameters and frameworks that say things like, how do I know at any given moment there are at least as many dollars on deposit as there are outstanding stablecoins? Government needs to tell us that. Those are the kind of rules that government does well.
Oh, okay. So it sounds like what you're in favor of isn't actually how most people would define a central bank digital currency.
Right. Well, that's my whole point is we have a choice in this country. The choice is, do we think the best way to digitize the dollar is...
Listen to this. Do we think the best way to digitize the dollar is... And listen to what he's about to lay out for you because it's fantastic.
To have a central bank digital currency, meaning something built by the government on whatever time with whatever features the government deigns to give us? Or do we think it's better for private innovators to develop different kinds of tokens that are fully fungible with fiat dollars, but they can be available yesterday? That's the choice that we have to make.
Before he goes on to the next point, I just want to interject here and say this, in my view, has been the plan all along. The understanding that private stablecoins can serve the purpose of a digital dollar as long as we put the regulatory framework with governments and agencies in place to hold these entities accountable and responsible, just as we would any bank that's carrying reserves, right? This instantly leapfrogs us to the front of the fourth industrial revolution, at the front of the pack. Keep listening.
The analogy I sometimes give, Laura, is, the Federal Communications Commission has jurisdiction over telecommunications. Now, we could have chosen as a government to have the FCC build cell phones. And we could all have our government-issued cell phone, and they would all look the same, and they'd have whatever features the government wanted to give us. Or we could have an FCC that instead says, hey, here are the rules governing wireless telephony, but we're totally fine if Apple wants to build the iPhone and if Google wants to build Android phones. That's totally fine. And they can all have different features and they can respond to market demands. Again, the role of the OCC and the Fed shouldn't be to build, at least in my opinion, shouldn't be to build a digital currency. It should be to do what the FCC did with phones. Tell us the rules that digital currencies have to sort of conform to, and then let the market build what people want. Whoever's had a great experience with government-produced product, they should raise their hand. But I think generally speaking, what we like in this country, the beautiful experiences that get created in this country are created in the private sector with the government establishing rules.
Well said, Brian Brooks. This guy is brilliant. He really is brilliant. I hope to meet him one day in real life and just be able to physically meet him and shake his hand one day. Let me jump here because he does talk and he reminds people that he sees in the future that when you're talking about ledgers, distributed technology, blockchain, that eventually he sees the role of banks and commercial banks and things becoming nodes on a network. They even went as far as to talk about DeFi and about how, and I've suggested this as well, that you may see regulators or banks be nodes on DeFi platforms, and otherwise, how would you regulate these things? Those set of questions for DeFi, decentralized finance, going forward in the future has not quite been answered, but it does seem like people are leaning in that way. I know I am too, because I know that DeFi at some point isn't going to just be a drop-down option on an exchange like Binance or somewhere else where you can borrow against your own holdings, with no intermediary. I believe at some point DeFi is going to break out and it'll be a DeFi platform to the consumer, right? So, in order to have that, and know that there's not any bad or malicious activity taking place there to take advantage of that customer or consumer, I think that they're going to have to address that situation, because if there's no intermediary to contact, then how do you know that the platform itself isn't working in some, malicious algorithm that's harming customers or consumers using that DeFi platform? That's going to be a question, remains to be seen going into future. And he also said the same thing, that, this is not something we have the answer to at this time. But I want to move now to 40 Minutes, where he does actually mention XRP, and it just feels good to hear him say it. He doesn't give an answer to it, but he recognizes that it doesn't have clarity. And it felt so good to just hear him say XRP, even if he doesn't have the answer just yet. But listen to what he says here.
We hear all the different views and then we try and balance them. That's a work in progress at this point.
As you just referred to, U.S. regulators do have a reputation for being stricter than other regimes around the world, but also for not offering as much clarity as the industry would like. As someone who worked recently in the industry and now you find yourself on the other side, I wondered what you thought can or should be done to ease the frustration the industry feels with U.S. regulators.
Well, the first thing we can do is we can provide some gosh darn clarity, right? That'd be the first thing we could do. That doesn't sound that hard.
But over what issues in particular?
Well, look, part of what you're dealing with in the U.S. government is the decentralization, ironically, of authority. So if you went to the UK, there are really only one or two regulators you ever need to talk to. There's the Bank of England and the Financial Conduct Authority. And if you deal with those two regulators, you've more or less covered your waterfront. Here, you've got a banking regulator, you've got a bank holding company regulator, you've got a bank deposit insurance regulator, and then you've got the securities regulators who are separate from the commodities regulators. So the questions I look at are, in my little world of banking, it is, how can we envision a role for banks in a decentralized financial environment? That's something we need clarity on. And then what are the legal powers of banks to custody, to transact, to accept deposits in, or to remit payments in crypto denominated assets? Those are kind of the banking questions. But then, of course, I don't control the securities markets. And so who's going to tell us whether, XRP is a security, or, whether something else is a violation of the Commodity Exchange Act? You have to talk to those other regulators. And that's, again, partly a strength of our system because power is diffused, and so it's not concentrated in one set of hands. But on the other hand, it makes it harder to give clarity. So my promise to the industry is, as long as I'm here, I will provide as much clarity as I can on all of the crypto matters that are within my jurisdiction. You've seen us starting on that. We have more to say if there's time.
That's amazing to me. Just to hear him even bring it up and recognize that there's an issue with XRP is terrific. Okay, the last segment here is at 45:43, and I want to play that for you right now. And it basically just talks about the idea of stable coins and how they can be the advantage. And let me see if I get this right here. I don't know if I started. Here, this will be good enough.
The regulators' attention on crypto in the last year or so has been driven by a lot of other things, less pandemic related, I would argue, and maybe less pandemic related than it should have been. We can come back to that. But more around issues of competitiveness, right? So we're seeing that the EU has released a stablecoin framework, at least in draft form. You see that China has actually already issued the e-renminbi, and they're now distributing it broadly through a series of airdrops. The question is, where's the U.S. in all of this? It's not an answer to just say we're really worried about AML and so we need to take a law enforcement lens. Of course we have to do that. But these other countries are seeing crypto and stablecoins in particular as a strategic advantage. And we haven't figured that out. So we really have to get on the stick here. We need to move faster to say what the framework is and to move the country in that direction. That's the way that I'm seeing governments think about it. Less pandemic related, more competitive related.
Well said to Brian Brooks, and he's absolutely right. And what he is leaning into here is that we get this idea of, calling virtual currencies defined as money, just as we have talked about here. The Federal Reserve and FinCEN have made a proposal to widen the agency's definition of money to explicitly include cryptocurrencies. This would also include, in my understanding, stable coins as well. They are money. And the reality here is he's telling you that if we get the framework together or the definitions right between all the overlapping agencies and understand these things to be money, the Federal Reserve doesn't even need to make a CBDC. They could absolutely just regulate the private sector that is issuing the stable coins. Pretty remarkable idea and thought when you think of that. Now, to add to the pressure of what's going on here, because that is pretty incredible, then we see, shout out to 432 XRP, DBS, this cryptocurrency is better than SWIFT. Well, what cryptocurrency could they possibly mean? Well, I'll tell you what they mean. They mean XRP. They call it Ripple in the article, which is a shame. But the reality is, in a rare act for fiat paper sector, a major player, DBS, largest bank in Singapore, named a cryptocurrency in its public marketing collateral and called it more cost efficient and effective than the traditional SWIFT system. Fintechs are also looking to disrupt cross-border payments. Most fintech solutions currently available are in retail space and tend to focus on reducing foreign exchange spreads, the bank said on its website. Ripple is an example of fintech looking to disrupt correspondent banking for cross-border payments at commercial scale. So why is it 25 cents? Because we're not at commercial scale. The bank added that SWIFT's lack of speed and customer understanding compared to fintech competitors like Ripple led it into 2015 to introduce a program called GPI, Global Payment Initiative, designed to improve cross-border bank payment behavior, improve transparency, and enable clients to better track parents at transactions near real-time level. So it says here, Tech Hotspot South Asia, which is Singapore, DBS. We just reported more news from this in this morning's video as well. DBS demonstrated awareness of the credibility attributed by publicly naming a cryptocurrency which it acknowledged for both its regional and its perceived shortcomings. This official mention has been seen as major leap in the field of finance and ecosystem that has ignored crypto for its speculative behavior and the lack of centralized governing party, it said. DBS Bank is a major banking player in the South Asian landscape, a territory that has become a hotspot for new path-breaking technologies. Remarkable stuff. Remarkable stuff. All right, let's keep this thing going here, right? Because it doesn't stop there. JPM coin is live, right? According to a report from CNBC Tuesday, Takis and is it Georgia Kalopoulos? I think I actually nailed that. JPM Morgan, global head of wholesale payments, said a major tech firm will use the token to make global payments starting this week. Well, that's interesting. Remember that document from the World Economic Forum on page 17 for the policy toolmaker kit for everybody to build a central bank digital currency? Remember the example for inter and intrabank payments and settlement? JPM coin and XRP. Couple all of this, understanding that Brian Brooks and others are pushing for the clarity here and to get that definition of money straight and the use of the public and private sector relationship regulated properly. Couple that with the idea that JPM is going live with their coin this week. Couple that with the World Economic Forum cites JPM and XRP for inter and intrabank settlement for central banks. Couple that with the idea that we have, what is this here? The U.S. Controls money, ready to classify legitimate currency. You know, when you think about this, the Fed is on the cusp of really rolling the idea of what money is and virtual currencies into the definition of money here. What I see is there is a narrative that is created from the top, not from the bottom up. That's who we are. We're from the bottom up. We've always been here, right? But the point is that we're seeing the regulators and the financial institutions and the world consortiums and collectives, these groups and entities are all pushing this narrative and carrying the baton now. This is extremely exciting to me because I believe that baton goes even further reach and goes to 25 days from now, the G20 Virtual Leaders Summit. And I believe there's even a meeting tomorrow with G20 Digital Economy Task Force, I believe, if I'm not mistaken, as well. So then there's the idea, what does this all mean? I mean, we're talking about private-public relationships here in the United States and issuing stable coins, and then we're talking about the global level meeting on these things, the understanding of what the World Economic Forum already understands, and then the idea that the Financial Stability Board, which is a regulatory body connected to the G20, sees an idea and they see room here for the world to adopt, regulate, supervise, and oversee global stablecoin arrangements. I really lean into the notion that we may see XRP qualify for this designation should they create a classification for such a thing. I really do. And I think there's an idea there also that this is why it's not had a classification or a designation yet. And, to be honest with you, everybody's leaning in saying, we need to hear from the SEC that XRP is not a security. But the reality is, a federal judge in 2018 ruled that all cryptocurrencies are to be regulated as commodities by the CFTC in 2018. That had already happened by a federal judge. FinCEN made a ruling in 2015 saying that it was a virtual currency. Department of Justice was in on that ruling and that fine in 2015 against Ripple and XRP and called it a virtual currency along with that same decision from FinCEN. So to me, seeing the Fed and FinCEN properly going out and creating a proposal here to expand the definition of money to explicitly include virtual currencies tells me that if we get that done, we may not need to hear from the SEC at all because they don't deal with money. They deal with securities. All right, that's pretty incredible stuff right there, ladies and gentlemen. So remarkable. JPM goes live with a coin. It's sitting next to the example of the Policy Toolmaker Kit. Sheila Warren, who made the Policy Toolmaker Kit, was a recent keynote speaker at the most recent Swell event. And all of this is getting pressure from around the world because DBS, the largest bank in Singapore and certainly a large bank in the Asian market, is saying that Ripple and XRP is more efficient than SWIFT itself. The plot thickens. Hit the like and subscribe. Leave a comment below. Share with somebody you know. Make sure you check out all the links in the description box in the comment section for anything you may want or need. They are trusted links, and I use every one of those products and services myself. All right, take care, guys. I'll catch you on the next one.